Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. S&P 500 is down about 1% there. I think pretty much across the board, market is down around 1%. The small caps and the banks did get hit harder today. They've been lagging, and I think for this market to really see big upside move, because you can see the Nasdaq obviously is hitting the all-time highs for days, as while the S&P 500 is not at the all-time high yet. It's 340's all-time high. Kind of in the middle ground is where the S&P 500 is, and then you see small caps lagging and the transport. So I think that's kind of what making a lot of people a little bit confused where this market is going, because when you see Nasdaq or semiconductor, you think that, well, this market looks very, very strong. When you look at S&P 500, it's kind of, again, it's the middle ground. And when you look at like transport and you look at the small caps, they're lagging quite a bit. And so I think for this market to really find some traction to the upside, I think this recent move was mostly fueled by the Nasdaq, the tech stocks, and tech stocks were really moving last week or so, and that's what made this move. And so I think for this market to see, at least for the S&P 500 to go back to the all-time highs, we would want to see strength coming into the transport and the small caps and some and also the bank stocks. So, but that's just kind of an overall picture there. But let's dive in, look at the price action, what happened today, and trying to dissect this thing to figure out what we may see going into tomorrow and rest of this week. So today, as you can see, so that was the first hour, right? So we saw, looks like there's a gap down. So that's where it closed yesterday. And then this is where it opened, right? So it closed at around 317. It opened this morning, slight gap down at 315, right? And then it pushed back up, filled the gap. And then the second hour, it attempted to continue to push higher, even attempted to fill this gap right here. Wasn't successful, right? And then we started kind of rolling over here. That was the third hour, fourth hour, fifth hour, sixth hour. If you guys remember what I was saying yesterday, it would have been better for the buyers if this gap was filled. Now that gap wasn't totally filled. I think either way, even if the gap would have been filled, we would have still seen it, that level acting as resistance. What I'm saying is, if the buyers would have filled it and then would have pulled back, and then on the next up move, they wouldn't have to deal with the gap again until this gap at 323. Now that we're pulling back without filling this gap, the entirety of this gap, well, buyers going to try coming back up to fill this gap. And at that time, they have to worry about this level again, 317 and 318 or so as a resistance. But anyhow, we came down here. There was this gap, right? What was that? Tuesday. So Monday, we saw, about 1.2% gap up, right? Half of the gap is filled, half. So the gap was not filled the entirety of it, right? Do you see that? This is where it closed on Friday night. This is where it opened Monday morning. So half of that gap is filled, right? So let's put that right here. So again, let's be fair, with bears also, because we've been fair on both directions, right? For buyers and sellers, because we talked about how this gap, it would have been better for the buyers, right? If that gap was filled. Kind of same way here today, as of now, as of this day, with the data is at hand. We might see things different tomorrow. Bears might continue lower, fill this gap tomorrow, but as of now, the sellers were not able to fill this gap, the entirety of it. So if we see a bounce here, right? Buyers gonna for sure that time is gonna go up and fill this gap. If we do see a bounce, we don't see a bounce as of today, because you can see that when the gap does not get filled all the way, you see that what move can come out of that reversal, right? At least in the short term, in the micro term, let's call it today's action micro term, right? That was that reversal, right? Kind of same thing here. There's this gap, right? Again, there's a gap here. This is where it closed. This is where it opened. This gap, 312, 313, 314. As of today, as of now, the gap remains open. So that means if we do see any kind of bullish move tomorrow, there could be a rally to the upside, and bulls are going to try to fill this gap at that point. It would have been better for the bears to fill that gap today when they had the chance here on the last hour, just kind of bring it all the way down. I think it would have been better for the bears to do that. But there's another scenario that bears could utilize this gap, right? So this week, we talked about how buyers, if they can gap it up, right, they're going to go back up to at least 323 and above. Well, they didn't do that. We started pulling back. Here, if bears can gap it down, right, then bears can turn this into another island top gap, right? So that's a possibility. So we're at this level. If the bears bring it down and fill this gap, it's gonna act as support, right? It's going to act as support. If buyers just come in tomorrow morning, gap it up or something like that, we start to move higher first couple hours of trading with some strong buying activities tomorrow morning. 313 is going to act as support. And when the gap is not gapped, if the gap doesn't get filled all the way, we know what happens. It really solidifies that support area, right? We've witnessed it already, and we've been tracking this gap right here. That 297 gap, bears tried, not filled. Bears tried again, not filled. Bears tried again, not filled, right? The more times bears trying to fill that gap, the more times they failed to fill that gap, the stronger that support became, right? And that's, obviously this is more of a midterm sense, because this time frame going all the way from late May to like late June, that's about 2 months of time frame there. In that entire 2 months, buyers been protecting this gap at 297, 295. And then from that, bulls brought that up. And that's looking at things from more of a midterm sense. But in the short term of things, this gap, buyers protecting it, will be important going into tomorrow. If we see some early buying pressure, I could see this thing going back up here and buyers trying to fill this gap. So best scenario for the bears is gapping it down. But like a lot of times, because we track gaps so many times, and we talk about gaps almost every single video, that you think these gap ups, gap downs, this island reversal is always going to happen. It seems like, because I get these comments on YouTube and Twitter and things like that, and StockTwits, that we're going to gap down, we're going to have island top reversals and island bottom reversals are not they're not they're not frequent. You know what I mean? They don't happen a lot. So just keep that in mind, like these island top reversals, island bottom reversals. And a lot of times, sometimes we could see this thing gapping down like this, and maybe potentially that becomes right when it gaps down, maybe that becomes an island top at that moment. But there's a chance where, bulls can bring it right back on and fill it, because there's another gap down here. You see what I mean? So for the island reversals to be in effect, you need that island reversal gap to remain open as long as they could stay open. Then that makes it more potent, right? Remember this island gap right here, that was open quite some time, and partially it was closed, but a lot of it was still open for entire like June 11. It didn't get filled until so a whole month it was open, right? And that's what made this market very hectic in the last 1 month, right? So just because I feel like because I'm tracking gaps. I'm talking about gaps every single day on every single day. Now everybody's expecting an island top, island bottom every single time. It's a rare occurrence. Just let you guys know, I do talk about it just in case if we do see it, you know what to expect. I just want you to know that it's not something you're gonna see all the time. It is gonna be a rare occurrence, right? We don't see any kind of island bottom here, do we? No, only time we really truly did have island top was here. That was it. We didn't see any kind of island bottom, right? For the island bottom reversal, I mean, there's island top. There was another island top here, right? There's two island tops here. So that was happened what? June and then end of June. So it took about another month or so to form that. But it's something that doesn't happen like every day, right? Just keep that in mind. It's not gonna happen every single day, and you know what I mean. Every day, island top, island reversal, island top, island bottom, island. You know what I mean. It doesn't happen all the time. But keep in mind, if we do see a gap down tomorrow, that's gonna turn into an island top briefly. However, there is another gap here at 311, right? And so let's say this thing gaps down to maybe 311 and then hits that gap area. If bulls brought it right back and fill this gap and then chop all day or something like that, then there's no longer an island top. So the island gap has to be open and then stay open for days for that island reverse to be effective or potent. Sometimes it'll stay open for a day and the next day it will get filled. Then it'll lose its potency, right? So when the island reversal happens, it's one of the strongest form of a short-term reversal signal that could, depending on the size of the gap. Also, this was definitely a big gap. So gapping from here to here, that's a much smaller gap, and the effect is going to be much smaller. So keep that in mind. It's not always going to happen. More often than not, when you see price kind of hanging around a gap area, it tends to either act as resistance support. Like even here, bulls could have just gapped that up today, which we talked about yesterday, and then just made it things a whole lot easier, right? And we just started pulling back, right? So what I'm saying is, every time when we're at the gap, you're expecting it to see some kind of island bottom, island top. That's, you know what I mean? That's not likely scenario. Though this market obviously can do anything, but as far as the probability is concerned, the islands, they don't, the market doesn't always perform them. But anyhow, so we got the 313, 312 there. This is a vicinity. Again, I want to stress the fact that even though we see a little bit of pullback, we are down 1% on the S&P. I want you to look at this line chart here. We are still in the vicinity of a higher high. And we talked about this yesterday. Spent quite a bit of, I think yesterday's video was about 20 some minutes explaining what that means, right? We got the cultivation of higher high. That means if we do see a pullback, market is pulling back to cultivate higher low. Because we don't have a decent sized higher low yet at this point. We just kind of went straight up, right? Where is the higher low? We don't have that. Decent size higher low would be something like this, something like that. The move that takes couple days before we see that higher low, higher high, right? So we don't know. Are we going to find support 313? We don't know. Are we going to come down to 312? We don't know. Are we going to come to 309? We don't know at this point. But I have to say that these are the support levels that we can watch. We got the 312 and all these gaps that buyers have opened up. That's going to make things hectic for the sellers, right? So as the buyers brought this up from 300 to 317. There was gap that's still open. There's this gap still open. There's this gap still open, right? That's what I'm saying. Even if bears gap it down, potentially make this an island top, there's this gap here is going to all act as support. Unless they can, they can really bring it down hard, like from here to here. If that will be some shenanigan gap down, that would be like that would be best. That would be like 2% gap down. If you can see 2% gap down, bears can do some damage. But we have no way of knowing that, right? So we have to go by what we see as of today, right? So all these gaps, all these gaps gonna provide support. And I think, you know what I'm gonna do? I'm gonna throw a little fib here. Do a little short-term fib support levels. So we got the very, we're staying right this vicinity. So it looks like 310 and 308 is potentially, if we do see a further decline, and that's the vicinity where you see my midterm moving average and my long-term moving average is residing in that vicinity. And at the same time, you can see that we talked about this potentially bearish divergence. I'm gonna get rid of this now, that downtrend resistance, because it's not useful at this point because it's already been broken to the upside. And then now it looks like it's breaking to the downside. So we have this bearish divergence here and made a lower low. Made lower low here on the oscillator. That tells us the momentum is shifting. So in the micro term, I have to say that obviously we see some bearishness coming in. In the short term, I don't want to quite say bearish yet because we just cultivated a higher high. But because I do see that bearish divergence, right, on my oscillator, I'm going to say as of now, as of today, I'm going to say neutral to bearish. Neutral to bearish in the short term. Neutral to bearish in the short term. As of today, if we see this thing furthering down, this thing continuing lower tomorrow, then at that point, I'll label this market short-term bearish, right? A lot of people ask me the time frame of the short-term, mid-term, long-term. Like short-term will be like a week or more, right? Mid-term will be like a month or more. Long-term will be like 2 months or more. And I put that. I'll put that in the description section along with if you're wondering about these moving averages and things. But so we initially have that bearish divergence. So with that bearish divergence on a 65-minute chart, short term I'm leaning towards neutral to bearish now. Midterm, obviously we're still bullish because my midterm moving average is rising higher. Long term, obviously we're bullish. We've been bullish in the long term since early April, right? Early April. So I think what we need to see going tomorrow, we definitely have a micro term. When I say micro term, it means for this day plus, right? Day plus is micro term. So micro term, it's bearish. And on top of that, we have a bearish divergence, right? And last time when we threw bullish divergence, we did see a pretty swift move here. So now with the bearish divergence, are we going to see a much steeper down move? And best way for the bears can really put some damage to the buyers, it's got to see some magnificent gap down. Some like throwing it down hard gap down because too many supports here. We have way too many support. All these 313, 312, 310, 309, 308, they're way too many gaps. So what I'm saying is if bears are gonna try to bring it down, right? They're gonna march it lower. Buyers gonna come in on every level. Buyers gonna come in at 312, buyers gonna come in at 310. Every single level you're gonna be met with buyers bring it up. Met with buyers bring it up. Met with buyers bring it up. And you know what happens when you let buyers kind of hang around. They like to make things a little bit hectic for the sellers because you know what they do? You let them hang around here, they bring it up. You let them hang around here, they bring it up. And these kind of action kind of makes things hectic for the bears, right? because they don't like that. Bears don't like that. Bears don't want to see any kind of like slow down in their downturn. You know, they love to see a move like this and that. None of this up and down sideways shenanigans, right? And that's kind of what it looks like it's gonna happen, is sideways, up and down volatility, but bringing it back up. Volatility, bringing it back up. Volatility, bring it back up. Volatility, and then at some point buyers just bring it up. And because, again, saying what could happen is, you see we do have a bearish divergence, but there's kind of weird way how the buyers can actually like manipulate this. How? While the oscillator comes down, right? Completely reset. It comes, we've seen it before. You guys remember back in, I don't know, I think it was like May or something like the June, I don't know, where like price seems to be like floating around, like goes up, comes down, goes up. Like it hovers around, like, you know what I mean, like 317, 312. It really doesn't decline like more than 312, right? And just kind of do this for days, right? And then you see oscillators start coming down, and then it goes all the way back down to bottom of its band, while the price just kind of pretty much moves sideways. That's what you call correcting through time instead of price, right? It's the way buyers kind of absorb volatility, because we definitely have bearish sentiment going around here in the short term, right? But because we have built this momentum, because we have these gaps that's going to provide support, I feel like that's what's going to happen. We're going to see some up and down, sideways, grindy, choppy move where the price kind of hang around in this range-bound environment. And in that process, in that time, the oscillator is just going to get back to that oversold territory, and then price get up. So if the bear is going to try to bring it down, that's what's going to happen. Unless a shenanigan like move like this, where they have to bring it down hard, pretty hard. But even right here, I felt like that was hard, down moves. Even then, there were these gap areas, and these moving averages. You see how we just got right back up, right? So, and that was that midterm moving average. This midterm moving average definitely have impressive resume, right? We have to agree with that, because that's a midterm moving average, 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 that's right there. And that midterm moving average is currently hovering around at around 308, 309, 310. 309, 310 is where that midterm moving average. So I think at this point, with what I see, the worst case scenario for the bears, if they can really, really bring it down, is 310, 308. 310, 308 is the best they can do, right? So that would be, I think, if we do see some fast selling pressure, I think bears could, best case scenario for the bears, they could potentially do 308, 309, unless some crazy shenanigan gap down. If not, buyers gonna come in. Buyers gonna come in and buy every time when bears come down and fill these gaps. And that's gonna make things hectic for the buyers. So in the short term, I think we're gonna get in. I'm gonna label it as of today neutral to bearish in the short term. Midterm still bullish because of my midterm moving average is rising. Long term average still bullish, and with potentially worst case scenario for the buyers, right? Worst case scenario for the buyers, best case scenario for the bears. The sellers will be at 308, where that midterm, my long-term moving average is hanging around. If the market comes that low, I think that would be a good buying opportunity in that vicinity after confirmation, or potentially bouncing off of that level. So we'll come back tomorrow and we'll go from there, right? You guys enjoy your evening, and good luck trading tomorrow.